How is net pay calculated after payroll tax deductions? Imagine getting your paycheck and wondering how the final amount you see is actually calculated. It's a process that involves several steps, especially when payroll taxes come into play. Let's walk through how your net pay, or take-home pay, is determined after all payroll tax deductions and other withholdings. It all starts with your gross income, which is the total amount you earn before any deductions. This includes your salary, wages, or hourly pay. From this amount, the first step is subtracting pre-tax contributions. These are amounts you choose to put aside before taxes are calculated, like contributions to retirement plans such as a 401(k) or health insurance premiums. Deducting these reduces your taxable income, which can lower your overall tax bill. Next, payroll taxes are withheld based on your taxable income. These taxes include federal income tax, which depends on your income level, filing status, and the number of allowances you claim on your W-4 form. State and local income taxes, if applicable, are also deducted, and these vary depending on where you live. Then, there are payroll taxes that fund Social Security and Medicare programs. Social Security tax is usually 6.2% of your gross wages, up to a certain wage limit. Medicare tax is generally 1.45% of your wages, with an extra 0.9% on higher incomes. These taxes are mandatory and are used to support social programs for retirees, disabled individuals, and health care. After payroll taxes, any post-tax deductions are taken out. These might include voluntary contributions to Roth retirement accounts, union dues, or court-ordered wage garnishments. These are deducted after taxes are calculated and withheld. Once all these deductions are made, what remains is your net pay. This is the amount you actually receive in your paycheck. For example, if you earn $5,000 a month and have no pre-tax deductions, your federal income tax might be around 22%, Social Security 6.2%, Medicare 1.45%, and state tax 4%. If you also contribute $165 to a Roth retirement account after taxes, your net pay would be approximately $3,152.50. Understanding this process is especially important for Asian American small business owners and employees. Different states may have different tax rates, and some communities may have additional considerations. It's a good idea to review your pay stub carefully and make sure your W-4 form is correct. If you're unsure, seeking help from a tax professional can ensure your payroll taxes are calculated properly and your compliance is maintained. Employers also need to accurately calculate and send these taxes to the government to avoid penalties. So, in simple terms, your net pay is what you get after starting with your gross income, subtracting pre-tax contributions, withholding payroll taxes, and then deducting any post-tax expenses. This process makes sure you meet your tax obligations while receiving the correct amount of money in your paycheck.